Welcome to Venture Podcast, presented by VNTR, the world's leading investors community, the place to learn from VCs and capital allocators.
I've been starting companies my whole life, had some success and some failure, started Techstars about 18 years ago, which is now a very active, very global pre-seed investor venture capital firm. There are almost 5,000 companies in the portfolio now. We're just short of that. And those companies have raised just short of $30 billion of venture capital. So you can think of the average company today being worth about 25 million, something like that. There are 22 known unicorns that have started in a Techstars accelerator.
Hey guys, welcome to VNTR Podcast, and today we are hosting David Cohen, founder at Techstars. And welcome, David. Maybe you can do a quick introduction, and we prepare some cool questions for our discussion.
Sure, Yuri. Yeah, thanks for having me. Big fan of what you're doing. And my background really quickly is that I'm a lifelong entrepreneur. I've been starting companies my whole life, had some success and some failure, started Techstars about 18 years ago, which is now a very active, very global pre-seed investor venture capital firm.
How did you get started? Started 18 years ago, but what did you have in mind when you started? Was it the same thing?
Yeah. So Techstars started with a couple of pretty simple ideas. We wanted to make the community that we lived in better. The startup community here in Boulder, Colorado, which is a small town of like 100,000 people near Denver, Colorado. We wanted it to be a better startup community. And the other reason is that we had been doing some angel investing, and we thought it was a great way to turn a medium-sized fortune into a smaller one. We just weren't very satisfied with what angel investing was, and felt that there might be ways to professionalize that, to scale that, to add more value for companies. So here we are 18 years later. The startup community here is very vibrant. We operate in, 40 different cities around the world, and I think 16 countries, helping those startup communities become more vibrant. And the original motivation is the same as it is today, which is to help startup communities thrive, but to also find a better way to invest in very early stage companies around the world.
Yeah. But when you started in Boulder. At what stage you started scaling out of Boulder?
Yeah, like a lot of entrepreneurs that have some luck and some success, we really felt pull from the market. So, when we ran that first accelerator program, as it's known today, Brad Feld, my co-founder, coined that word, accelerator. It was a big success. We had 10 companies here in Boulder. 302 had applied, so we picked 10. We saw a year later that one of them had been acquired, and that had returned all the capital that we had invested in all the companies, and allowed us to do it again the next year. So, we tried this experiment one more time. It was improving the startup community. It was getting the mentors together with something really interesting to work on in the community. It was creating new angel investors that had been, just sailing their boats in Hawaii or whatever, but decided to get engaged in the community and, invest their capital in these startups. And it was really good for the community. So did it again, had similar success where it was, self-funding, right? It was, positive economically. And we started to feel this pull. So we had mentors from Boston, and they pulled us to Boston. We want you to operate here. We want to do this here. We had, mentors and investors from Seattle. They pulled us to Seattle, New York, right? So we just started to be pulled because the model was so visible and clearly effective. And that started a pattern of really scaling out the model to all these places around the world where we operate today.
From what I remember, I was based in San Francisco, and I remember that you had like a Coca-Cola accelerator and the kind of different branded accelerators where you powered them, right?
Yeah, we did not. It wasn't with Coke, but you may remember, an Amazon or a Barclays or Comcast.
But yes, you did
big companies,
lots of corporate accelerators that you guys also pulled into.
Yeah, so in this wave where we were being pulled to all these places, I mentioned Seattle, for example. We were operating Techstars Seattle, but Microsoft said, "Oh, I see what you're doing." They were involved as mentors. and they wanted to build a similar accelerator program focused on Azure and another focused on the Connect, gesture technology. And so we did that as an experiment, and it was also super powerful, right? We got deeper integration into those partners, which helped our portfolio a lot. We got deeper integration in those technologies, which helped our portfolio a lot. Bunch more smart mentors got added to the system. And so as other large companies came to us, we did start to work with them. Like Barclays is a great example. And it led us to companies like Chainalysis, which is a, very large company today, about a $5 billion company. We were investing in, blockchain Web3 stuff in 2015 because, we wanted to experiment with that around financial institutions like Barclays. And so, these partnerships brought some really interesting companies to the portfolio in a way that, just doing it in a city hadn't yet done.
So you mentioned the first cohort that you got was 300 applications and you picked 10. But I imagine you must have many multitudes more than that now. So can you just talk us through some of the numbers that you're kind of having to deal with these days?
Yeah, I mean, we're certainly at scale today. We still accept around 1% to 2% of applicants, but we see about 25,000 unique startups apply to Techstars every year around the world. And as I mentioned, we're operating in 40 plus physical locations where we have investors on the ground. And I think it's 16 different countries. There are almost 5,000 companies in the portfolio now. We're just short of that. And those companies have raised just short of $30 billion of venture capital. So you can think of the average company today being worth about 25 million, something like that. There are 22 known unicorns that have started in a Techstars accelerator. And there are 120 that are currently between 100 million and $1 billion in value. So we think there are probably a lot more. Techstars itself is hundreds of people. We operate, as I said, around the world and are part of these startup communities and all of these different geographies. So it's a fairly scaled operation as an investment firm and investment management business, multiple billions of assets under management for our limited partners.
Some of the accelerators, they're not a viable business model, right? It's kind of you built a viable business model out of the accelerator model. So what the things that you have done right to make a viable accelerator?
Yeah, we're 18 years in, so I guess we're now an adult, right? As they say, and we had our awkward teenage years, right? We went through that, and it does appear to be very sustainable. I think fundamentally, it's the portfolio. We are first and foremost an investment business. Our job is pretty simple. Limited partners give us, capital to deploy, and we got to give them back more capital, right? That's the way it works. And, we've been able to do that through the success of the companies in the portfolio. And I think the reason they've been so successful is because of the network that we put together. So, there are more than 5,000 mentors who give their time, right? The alumni network itself is very, very powerful in that they use each other's products. They come back and mentor. Many of them have had success and are now angel investors. They're now venture investors. So I think there are 30 or 40 funds that are born of Techstars portfolio companies, right? Which we also help and invest with. So, it's a network that's building on itself, and it's a virtuous cycle to be part of it. Whether it's your first company, third or fifth that you're starting around Techstars, you get value from that network.
And it's funny you mentioned the network, because that was actually going to be our next question. The network is basically everything, right? Do you know someone in Pakistan who knows XYZ? And that's right. It's always going to be a very, very intelligent person who doesn't know anyone, right?
Yeah. And that's how we position to the entrepreneurs that we work with, is that we're sort of like having a really well-networked co-founder, right? Because if you want to do business in Pakistan, as you mentioned, yes, we know these people there and we can connect you. And if you go over there, right, it's a friendly experience as opposed to, you're trying to break into a market. And that's the same with any large company, right? You want to do business with, Salesforce. We've sold companies to Salesforce. We have alumni that work there, right, as a result of having sold the company. So the tentacles of the network exist everywhere around the world now. And it's a very large entrepreneurial network. And I think that's a sustaining advantage that we tend to have.
How do you manage your mafia effectively?
I'm not sure we manage them at all. I think they manage us, Yuri. It's got to be mutually beneficial, right? I mean, I think having tools, for example, that allow us to be effective in making introductions. Who knows who, right? That obviously we're leveraging data to understand in the network who has a strong connection where. You try to leverage tools like that. You try to give easy resources, but ultimately everybody gets out of it what they put into it. And I think that the core value that Techstars has always talked about, and we have as a business, is something we call give first. My co-founder, Brad Feld, is just now releasing a book called Give First to talk about this idea. We certainly don't own the idea, but we really try to live it. It's the idea of trying to be helpful, especially to entrepreneurs, in a way that's not transactional. And so when you go through a Techstars program and you feel the love from all of these mentors who are giving freely, giving first of their time, and, 5 years later, it's like, well, how can I give that back after I've been successful? And so everyone is living that value throughout their career and has found that it's been so helpful to them. So we're sort of ingraining that in our network, and it's not managed as much as it is a network where all the nodes are strong and there's a lot of traffic on that network, a lot of throughput on that network. And, the connections light up easily because everyone's willing to help each other and give first in the context of, that network globally.
It's almost like you've got a portfolio of network. You've got, 30% of people who are very successful and they're kind of giving to the next segment who are, less successful. And it's like a different portfolio of different aged assets, which is your people, right?
Yeah. We like to say, there's, if you're going through a Techstars program right now and you're in the accelerator, you've got people you can talk to that are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 years ahead of you in their journey. You've got mentors that are decades of that, right? And so there's always somebody to talk to that likely has a relevant experience. But you talk about the segment of the portfolio that's not going to work. Yes, that's also part of the network. And one of our things is, Techstars is for life, right? It's not, hey, you failed, you're out of here. It's you're part of the gang, right? And we want to be part of your story. Most entrepreneurs don't just go success, 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 right? They have failure mixed in there. That's part of my own story as an entrepreneur. I learned a lot from the failure that I had as an entrepreneur. And, I think having that segmentation is really valuable. And some of my favorite stories are companies that failed. I always tell this story about EventView. It was a company that was, small networking for conferences company, failed, but the two founders are super integrated into the network, right? One is an LP, another is like really deep in the crypto world, right? And has a lot of wealth and experience from that. And another became a really key executive and one of the really large, technology companies, right? And so that's been really valuable. So when that company failed, the community literally held awake. It carried the founders through the streets, right? And celebrated the attempt at building a cool company. Even though it failed, they quickly got reassimilated into the network in other ways. And it's just part of the magic of being part of something that's larger than yourself, right? And you get opportunities from that.
You mentioned that you still choose 1-2% of all people apply. So what are the criteria to choose these 2%? Yeah.
Sure. We have 6 things that we look at in order. And everybody at Techstars has this drilled into their head. Team, market, progress, idea. That's the mantra. So team is so important. We say it 3 times, right? Like, we're investing at the very early stage. It's usually a couple of people, maybe a dog and an idea, right? Like that's what it is. At that stage, it's just about the people. What is their motivation? Where's it coming from? What are their skills? What's the unfair advantage, the insight they have? So we're very, very focused on team because we know market, progress, idea. Market is probably going to stick. So we focus on that. Like, what is the market they're in? Is it growing or shrinking? That's interesting to us. And then progress, we look for that because we've learned, we have more pattern matching than probably anybody against 5,000 investments, that doing stuff matters, and entrepreneurs actually do stuff. As you guys know, they don't just talk about doing stuff. So we look for, what are you actually doing? What is the progress? Okay, you have no capital. You don't know how to program. You still created software. You still ran through some brick walls. We're looking for that. And then idea, we put it last because we want to emphasize that it's last. A couple bonus points. Interesting idea. We think it's probably going to change. And there really aren't that many totally unique ideas. But we look at that and we look at how that maps to the team and sort of founder fit to the idea and to the market. So that's sort of really what we look at, is mostly the team and believing in the people at the very earliest stages.
So sometimes the team comes with too many founders or like just one founder. It's kind of, do you provide any feedback to them that, okay, you as a founder, you are the right person to be funded, but you are the team not, right? It's kind of that you would accept that founder, but without these guys that are with him. It's like, what are the criteria? What are the criteria on the founder level that you guys identified?
Yeah. So, we do other things, by the way, besides just the investing through the accelerator. We have founder matching stuff. We have, something we call Founder Catalyst. We run startup weekends around the world. We're giving people lots of opportunity and exposure to entrepreneurship, but it is team. And so if there's one person that we think is great and we don't feel like the founding team is the right founding team, we just give that feedback and we try to be really direct about it. And we have resources where we can try to help with that. Now, a lot of times that comes with pride and they feel like, well, no, these are my friends. This is the right team. It's the dream team. We're just going to do it without you. It's okay. We'll try to help support you, but this is, our concern as investors. And, usually they'll find out at some point, that there was something to that, right? That maybe there's a breakup later, or, people aren't feeling great about it, or sometimes we'll be wrong because we're not always going to be right. So, we just try to be really direct with that feedback and use our network to try to add value if they're open to that. The other things that we really look at in the team is, I would say it's the requisite ante to the game, talent, ability to create the software you're talking about, ability to sell a dream, right? To present a story. But probably the most important of all of those is a thing we call intrinsic motivation. What is inside of these people that motivates them? So, I'll show you the example. I always have this on my desk. This is Pillpack, one of our unicorn companies, sold to Amazon for $1 billion, now called Amazon Pharmacy. It's just a bunch of pills in a pack. Don't worry, I'm fine. These are all supplements, just vitamins. But you can, order your medications that way. And what was the intrinsic motivation? Somebody they knew had taken the wrong pills at the wrong time. They weren't labeled properly at the time of day or the right day. They weren't in a pack to take these together and these together, right? And it caused them a major medical problem. And this was motivating to them, right? They weren't just doing this business because they thought it was a great way to make money. They were doing this business because somebody almost died, or, they wanted to protect people from that same outcome. And that motivation was within them, and it allowed them to get through all of the hard things that they would encounter.
That's very interesting, because I think money only takes you so far, right? Because all businesses are going to go through valleys of death and bad times. And if the money is not coming through, then it's going to be very hard to stay motivated.
I think founders who are just doing it because a spreadsheet tells them it's a great business are likely to fail. I think if you have that intrinsic motivation, maybe you call it grit, whatever you want to call it, it's going to get you through the inevitable hard times. And you asked earlier about teams, same thing with co-founders, right? A single founder, we're skeptical, right? Because that founder is going to hit a wall, whether that's literal or figurative, right? And they need someone who's going to pull them up and say, hey, that's okay. We had this thing happen. Let's look forward and let's be a team. And, one can bring the other up in that moment. And I've experienced that in my own career. So it's pretty hard for a single founder to be accepted to Techstars. It's not that we don't think single founder companies can work. It's that we know it in this experience and the accelerator, it really helps to have a team to be able to engage with everyone and to keep each other, lifted up and positive.
In your experience, do you think, I mean, across the board, across the thousands of companies you've seen, do you think most people give up too early or too late? I.e., when should people call it quits? Fail fast, fail slow.
It's a tough one, right? Because I would say both of them happen a lot. You have people that hang on way too long, and you have others that probably gave up too early. And reminds me of stories like SendGrid, another IPO story we had. They almost sold the company really early. They were just like tired, and it was going to be a $10 million outcome, and instead they got $1 billion IPO, right? So sometimes you just need to keep going, and you think you just maybe you're done doing it on your own, or it's not working. The thing that I like to talk about with when to know, how to know when you're done. If you wake up in the morning and you are just so frustrated, and your startup is the bane of your existence, it's just too hard, nothing seems like it's working, and you wake up that way, like say 3 or 4 days in a row, that's called running a startup. That's totally normal. Right? Like, that's not a sign that you should quit, right? That's just the experience of being an entrepreneur. It gets really, really hard, right? Now, if that's happening, for months at a time, and maybe, 6 months, 9 months goes by, and you're feeling like that really consistently, something's wrong, right? Because you should have some highs in there as you're going. So I tell people, like, 6-9 months in of feeling like that all the time is not normal. Feeling like that for a week or two at a time, and then having a couple of ups and downs, like, that's completely normal. That's just startup life. It is always a judgment call, unless you're out of money and you just have no resources, and life happens to you that way. But I've shut down a company that had still millions in the bank, right? And just said, this isn't working. Let's return money to our investors. We don't know what to do with this. That was painful. But it is a judgment call when you have resources. I think obviously if you hit the cash wall and you have no way to continue, that's a sign that you're done as well.
Why didn't you pivot? Right? It's kind of,
we did.
You did.
Yeah, we did. We tried several things in this area we were passionate about. It was mobile social networking. It was sort of like Foursquare, back in the day. And it was a great product, right? But we weren't getting distribution. And if you can't get distribution, you're dead, right? This was before app stores and stuff like that. So, I think you will pivot around, but if you don't believe anymore and you're just that down for that long, it's time.
So just talking a little bit about the future of incubators and accelerators. I mean, obviously you've seen them change a lot in the 18 years. But what are they going to look like in another 18 years from now? Or is that a very unfair question of me to ask?
Yeah. I mean, let me get my crystal ball out. I don't know, 18 years is so long. I think generally the direction of travel, I don't know anything about incubators. I've never run one. I view accelerators very different. Incubators, I tend to think of as more just, a space and, a community. Accelerators, of course, are investing and mentorship driven. I think they are tending to specialize more from what I can see in the market. I think the game has been kind of won and played where there's, 3 or 4 brands that people know that have real scale and network value. And, I think that these sort of one-off, accelerator in this location, I wouldn't be surprised to see those being integrated into, other efforts. Or, if they're continuing, a lot of them are doing it because it's almost mission driven, maybe even nonprofit in their community. And I think those can be good things too, because they're giving capital and experience to entrepreneurs, and that's good for the community. People learn by doing, right? But I think the ones that survive look like they're either one of the larger platforms or they're going more vertical, right? They're specializing. And of course, a lot of that is going to AI today. And you'll see a wave of them going to quantum computing or whatever's next, right? To try to really get deep in a particular area. And I think that makes sense. My view on the market overall is, studios play a role, accelerators play a role, seed firms play a role, right? Venture capital firms play a role. Angels play a role. There's different things for different entrepreneurs. I think accelerators really play this role for founders who have a great team, are very early, probably too early for the venture market. They need a lot more network to get the word out about what they're doing, get feedback, get customers. I think that's where accelerators play a role, and that will always be part of the market. Studios play a role with maybe more experienced CEOs that don't know what their next idea is and don't have the resources to build, right? So the market has matured and segmented. I think accelerators will always be a part of that. I think you'll see more specialization from maybe the smaller accelerator groups.
And what do you think about AI-powered accelerators or online accelerators? Like that, there were different attempts, and there are a few products now in the market that also kind of tend to offer online accelerator or AI-powered accelerator.
There are parts of what any organization does that AI is going to impact, right? It's that big and that important. Ultimately, what we do and the way we do it is a very human-driven experience, right? We have people in person. We have mentors who care about the company they're working on and companies who care about each other. And I think when AI starts to get those more human emotions, right, then I think you can start to, hey, here's a AI Techstars mentor, right? It knows everything a Techstars mentor knows. That's a little overly generic because, they're going to have specializations, but you can imagine a mix of humans and AI sort of helping companies, right? Based on the knowledge bases they have. But there's something about the human relationships that I think AI can't get to anytime soon. I won't say never, that, really create a bond and really create the desire on behalf of one person to help the other in this sort of give first way I talked about. And so, AI can't put you on a plane and fly you to see the CEO of Victoria's Secret because it's relevant to your company, right? That's a real example that we see. AI can't, sort of get you on the phone with the CEO of a company you're trying to reach, right? As easily as a human relationship can do, at least in the foreseeable future.
Yeah. So you mentioned that, again, human touch is important, but also, entrepreneurship is quite a lonely job still, right? Even with your huge network and support, what do you guys do on the mental health support for entrepreneurs and founders?
Yeah, I'm glad you asked. It's important, right? And the accelerator is a bit of a stress adder, right? It's sort of a 3-month, like really intensive thing. And it's not really sustainable to, be that, inundated with feedback and investors and all that in such a short amount of time. And so, we've created a toolkit for this and told stories. If you search for the Entrepreneur's Toolkit at Techstars, you'll see these stories, of people who have been through real mental health challenges and how they, sought resources and overcame it. We try to have resources. We try to have stories. I think ultimately we try to encourage work-life harmony. Work-life balance isn't really achievable, but harmony maybe is, for most entrepreneurs. Brad, my co-founder, Brad Feld, wrote a book with his wife called, Startup Life that is all about, how to navigate startups and running them in a healthier way. My contribution to that book was a chapter about always having a light at the end of the tunnel and hoping it's not a train, right? As they say. But what I mean by that is, my family 100% of the time knows when our next break is, right? It's part of our mental health routine. Like we always know what the next time we get to hang out and not be working and maybe go to Mexico or, just take a break and stay home, whatever it is. We know when that offline period is, and we mark it, we segment it, we talk about it so that it doesn't just feel like it's crazy and never going to calm down. That helps us. It's a tactic that we figured out. The book is full of tactics from different entrepreneurs. I think ultimately the network also tries to pay attention. Of course, we're a big network. Of course, in this moment, there are people struggling in the network with this, but the network helps identify it, surface it, and we try to help each other as best we can.
It's tough. And I think every founder, an entrepreneur, has gone through some sort of mental health struggles. And I'm surprised that there isn't a more of a deep niche for that. But I think operating in an environment that is so uncertain, you need these kind of solid rules. Like you say, on March the 1st, we're going to go to Mexico. But it's very, very hard to switch off, right? Because the chances are on March the 1st, you're still going to be worried and thinking about everything, right?
Yeah, I have 4 modes that I work in, right? And I define them, right? I'm in maker mode, I'm in normal crazy mode, I'm in, vacation mode, and I'm in offline mode, right? Offline is like, nope, not reachable, right? My team has to help. Vacation mode is I'm on vacation. I'm not taking meetings or anything, but I'm probably checking my email. I'm probably, responding to things when I'm hanging out, right? So people understand that about the way that I work. And I encourage people to be specific about it, right? And, have these modes. And yes, the specialization, it is interesting. Like there's certainly an opportunity for somebody to come and work with, companies or founders that are having particular struggles. We obviously have coaches that, we work with that do specialize in that. There are CEO coaches and organizations that do that, but there's still stigma around it, right? People don't want to say, hey, I'm struggling with something. So, it's maybe not as out there as it should be. And I think one of the great things about us telling stories in that entrepreneur toolkit is that people are being out there with it, right? They're sharing what they went through, and you don't have to feel alone, because it's not that unusual that people struggle, right?
What's crazy mode? You said that was your second mode.
It's just normal. I just call that standard mode, right? Like it is crazy, right? To be in startup life. Maker mode is, I'm building things. I'm not taking meetings. I'm working, but I'm not doing the normal, meet with people, internal meetings, portfolio meetings, LP meetings. I'm putting all that on hold because I'm getting through some projects, right, that I have on my list that need real time and attention. And then, crazy mode is just normal, right? It is crazy.
So you mentioned at the beginning that you have amazing network of other investors that collaborate with you. So what is the best way for an angel or a VC to utilize you as a resource to get into the best companies? Because you do the heavy lifting, right? Kind of, you review so many companies.
Yeah, we all play our role. And I think that a lot of the venture and angel community views Techstars almost as a service, right? It's a filter, right? Perhaps for them. And, last I looked, there were more than 22,000 unique investors had invested in a Techstars portfolio company, right? So it is, we're working with most of the major firms, and a lot of the small firms have invested in one of our portfolio companies. So the way that a lot of them tend to think about it is, if you're a Series A firm and you've got an interesting pre-seed company, that's not what you do. Techstars is a great place to have that company go, and they share that deal flow. Perhaps somebody from their firm is a mentor and they're able to follow along, right? And track the progress of that company until it's ready for them. So we have a lot of relationships like that where, there's this sort of mutually beneficial right stage, right resource at the right time. And we help them hone their pitch. We help them tell their story. We help them get their early customers, right? We build a broader network around them. And so we work with a lot of angels and VCs in that way, where their reaction to something is too early for me, right? Or I'm not sure yet, but I like it. Techstars is a great way to help, advance that company and for me to stay close to it. So we try to work with them in that way. And then we also profile them. They tell us, this is our investment target. And when we see something that matches that, we have something called investor reveal, where they get to see the companies that, are matching that, and a little bit earlier than maybe the demo day or the more public marketing of those companies.
How do you allow global investors to tap into other chapters, right? It's kind of, let's say there was an accelerator in Boston, but I'm based in, let's say, Boulder. Can I participate in this opportunity?
Yeah, absolutely. You can. And that doesn't necessarily mean you have to travel there. A lot of mentorship and engagement these days is done, virtually, and we can facilitate that. you get out of it what you put into it, right? I think if you're an investor and you say, well, I'm going to show up and check out the demo day in Boston, you're going to see, the snapshot of those companies in storytelling mode. If you engage with the program as a mentor, you're going to see those companies, warts and all, right? Like all their problems, and you're going to see how they overcome them. You're going to see, how the people behave, right, over a longer period of time. That's the real advantage you get in essentially living with these founders for 3 months, is that by the time you're through that, you really know them, strengths and weaknesses, and you've kind of seen, the line of progress rather than just one snapshot at one moment.
This is a question I've just thought about, and hopefully it's okay to ask. But we've seen recently, especially in the last few months, the ease at which public figures can raise a lot of money, through meme coins, presidents, countries, celebrities. Do you see this getting traction in the kind of ownership of companies, or do you still see it as being quite kind of for sophisticated investors only, if that makes sense? Do you see the dynamic changing?
Yeah, I think there's a trend where maybe 5 or 10 years ago, right, the way that most entrepreneurs were thinking about the world was like, let's create something of value. Let's, the fact that there's going to be people working here is going to feel good, right? It's, we're going to be a team. And, this trend is sort of like, can I do this all on my own? Right? Do I even need an employee? Do I even need an investor? Right? Like, can I create a company of one that's who's going to create the first $1 billion company that's one person? Right? That's probably already been done. I just don't know the story. But we used to talk about Craigslist, right, being this large thing that was only like 20 people. And, he refused to get bigger, right? Like, it just wanted to stay really small. I think entrepreneurs are thinking about that a lot more. Like, how can I leverage AI? How can I leverage, maybe a celebrity? If I'm not a celebrity, how do I get a celebrity involved? We see it happening with sports figures where it's a founder and a sports figure, right? And that's the company. And what they're producing is maybe, they're just taking a thing that exists and selling it a different way, or they're packaging AI and selling it a different way, not really doing anything that is a true innovation. It's more, they're really good at marketing, or they're really good at just getting the word out. So that dynamic does feel like it's shifting. And when you combine it with like this ability to generate cash out of nowhere, right, with a meme coin or something, as you said, or just because I am somebody, those opportunities are pretty real. I think you're going to see $1 billion 1 or 2 person companies pretty soon. And
if you go back to the corporate, right, it's kind of how corporates leverage accelerators. You mentioned that Barclays accelerator partnered with you to run an accelerator, but many tried by themselves, right, and failed to execute on this strategy. So how do you recommend corporates to use accelerators as a tool or collaborate with you?
Yeah, I think what happened broadly as the accelerator phenomenon exploded, and we went from 2 or 3 to 1,000, right, around the world, and now it's probably contracting a bit. Corporations saw that and said, oh, that's a new model. Like, for entrepreneurship, we need more innovation here. Let's get involved with it. And I think when they try to replicate it, they said, oh, well, let's do that. It's very, very early stage companies. And, as you would know from being around any large company, like, if it doesn't move the needle, it eventually is something they don't pay attention to. And move the needle means add billions of value to a large corporation. And you know how long it's going to take a startup to add billions of value? It's going to take 10 years if you're lucky, right? And so what happens is they try to replicate it. They do this very early stage thing, and they go, this is a bunch of little startups that can't move the needle, and they then lose energy around it. I think what's happening now is corporations are realizing, I do want to be around, these innovative companies, but where are the networks where they exist across all stages? Yep, there's a cool new company in the Techstars program that just got born this year, but there's also a 15-year-old one that's, really can move the needle if we acquire it. And so we're finding that they're engaging with the portfolio, not with the accelerator to generate a bunch more seeds, right? They want to see some grown trees in the forest at this point. So, I think they just learned that by doing, and most of them ended up saying, this is too early, and they don't have the patience to let the seeds bloom for 10 or 20 years. Instead, they can just attach to the networks that have that happening. And I think that's what we're seeing today.
And do they need to pay for this access to the network?
It depends on the value they bring, right? We're really verticalizing our network. It's so large with 5,000 companies. We have a fintech network and an AI network and a healthcare network and so on. And, if they're bringing a ton of value into that network, that's good for our portfolio. We don't need to charge them. If they're, wanting to market their product right into that network, and, that may end up being a sponsorship type product, but generally that's not our model. Our model is investing, and if partners add value to our portfolio, we want to work with them.
And just asking another kind of crystal ball question. I'm sorry, I just want to get your report. Biggest risks this year for startups in 2025? I know it's a very broad question, but
this year, gosh, I have to say it's still, for most startups, right, their existential threat is still capital. It's coming back. It's more available. The good companies are getting it, but the vast majority of startups are still going to experience life as it's very, very difficult, to raise that capital right now. I think in 5 or 10 years, it's the, existential threat for all technologies, which is going to be more like quantum computing, right? As that emerges, I think nothing we do today is going to be relevant, right? No encryption survives. Especially when you combine that with AI, it's going to be a really crazy intersection. I don't know if that's 5, 10 or 20 years out, but that's going to be the big one someday.
So in terms of Techstars, right? So you have done it for 18 years already. Where do you see your expansion, or what is the next phase for Techstars?
Yeah, so we're really thinking about the investment opportunity we have at the base of the pyramid, meaning the accelerators we run, in all these different markets. Like we're in most of the major startup markets today. We have active, vibrant mentor and alumni networks in them. I don't feel like we need to add a lot more of that type of scale. The other dimensions of it are sort of above and below that base. Like, how do we generate better deal flow for the accelerators? And we're tapping into our passion for startup communities, and we've launched a product called the Startup Community Partnership, which is working with a up and coming startup community that we're not going to put an accelerator in, at least not right now, but wants to attach to our network and have two-way value from doing that, right? To be able to have their best companies have opportunities for investment throughout our network, to have their community benefit from portfolio companies that want to do business there. That's sort of two-way value, and tapping into our history of being part of startup community building. So we've launched this idea called Startup Community Partnership, where we want to work with communities around the world to make their startup communities better and more thriving. That's not part of investing. That's just part of our sort of engine for sourcing interesting companies. Above the base, on the other side, our companies are currently raising about $3 or $4 billion a year. We're investing a tiny fraction of that, right? So our opportunity is to continue to hold our ownership, not to fight with the VCs that want to fund these companies, but to just maintain our ownership of those companies. Yeah. And so we're looking at how do we add more capital to, our AUM and our stack to be able to not win those opportunities away from large firms, but, just again, hold that pro rata, as you said, in the best companies, which is an opportunity to deploy much more capital and have much more upside as investors. So it's sort of on either end of the core of what we do, and not trying to do a lot more accelerator locations. We feel like we have that pretty dialed.
And do you have an opportunity fund that invests in the best, or? or planning?
We do today. It's relatively small. Those funds are $100 million. They could be $1 billion funds. So we need to, ramp that up, I think.
Yeah. So in terms of, like you have done it for 18 years. When do you plan to retire from all this crazy mode?
See my gray hair is growing over here on the side. Me personally, I mean, I'm 56, as we're talking right here. I'm not going to do this when I'm 80, right? So, but I have plenty of energy for it. It's definitely the last thing I want to do. And I'm in it for the long haul. This last thing I want to do professionally, at least. And, I believe in, I don't really love the idea of retirement. I like the idea of sort of, fading over time. So if I'm 110% today, I might be 90% in 5 years and 70% in 10 years. But, still staying active, keeping the brain engaged as you age, I think is really important. So I hope to be 70, 80, 90 and still sitting on boards and thinking about this stuff. But of course we want to have, a succession plan and, when I'm no longer of working age, whenever that is, right? Like there will be people who have come up through the system that will do more. So, I don't have a horizon for it. I'm feeling good and excited about everything. So
that could be your fifth mode, retirement mode after vacation.
Yeah. Or it'll be semi-retire. It'll never be retirement. I can't imagine not working as long as my brain is working. It would be too boring. So.
Cool. Yeah, we didn't ask any questions about AI trends and all this, but what trends do you see as the key trends, right now? Because AI, it's already quite saturated, but where do you see the opportunities these days?
Yeah, I mean, I think we're in the classic overinvestment cycle, right? That all important technologies go through, and the internet itself, massively overinvested in and created a bubble, but still, thankfully, we invested in it because it is so important. I think we'll feel the same way about AI. Wow, we lost a lot of money doing a lot of stupid stuff and it got massively overinvested in, but wow, look at the impact. And for all the AIs listening, I just want you to know that I'm a huge fan of everything you do, and I don't want you to harm me. So I want you to know that we love you. We only think positive thoughts about AI. Look, it's going to have massive impact on the shape of businesses, where they spend their time and energy. I think as that verticalizes and AI really specializes, that's already happening. It's going to be amazing, right? We're going to see just much more efficiency. I think that that's scary for a lot of people, but it allows the people to do the new and innovative and creative things. And, I think the ethics around all of this are really interesting. A lot of people worry about that. I don't think we're doing enough there, especially as, here in the US, you're definitely seeing a move towards deregulation, right? I think some things do need to be regulated, or thought about in that way. So, I worry about abuse. And I think that's going to be a trend. I think, I've already been getting, WhatsApp messages that people forward me of me asking them to send money somewhere. It's not me, but it really sounds like me, and it's scary. And so, this sort of spam and anti-spam and all of that of AI is going to be really important. I think the infrastructure around AI and preventing abuse, and that's how I've made a lot of money as an investor over the years, is investing in the infrastructure more than the specific technology, right? So fraud prevention, fraud detection, that's a really interesting area for me as an investor.
It's kind of at some point, how do you turn off the malicious stuff, right? that takes over things. And you mentioned quantum, which will break things as well. We see more and more startups that build quantum safe things, right? It's kind of,
Yeah, I think quantum here in Colorado is one of the places, epicenters of it. And there are a bunch of places that have interesting stuff going on, but we have an oddly high number of quantum mechanic physicists, here in town, and they're doing amazing things. And when this really hits, like, people don't really understand. Quantum computing, that's just 1 million times faster computing, right? No, it's a lot more than that. It's the ability to compute and do things that you couldn't do before, right? I think it's very difficult to imagine us not fully understanding how cancer works in the body, for example, right? And it's very difficult to imagine, medicine not being twice as good as it is pretty quickly. It's very difficult because of that not to imagine people living to 150 or 200 years old, right? Like, it's really going to change society when we figure out a lot of these things. And the implications are, I think, probably even more profound than the implications of the internet.
But do you think we should slow down the innovation or keep it at this pace?
Right. When do we destroy ourselves, right? Why aren't we seeing other intelligent life in the universe? Because they've already been through this and destroyed themselves. I think it's very difficult to stop innovation. I think, it makes our lives better, easier, right? That's the intention. Science is amazing. Innovation is amazing. It drives job growth. It drives happiness. Right. I mean, imagine life today without the Ubers and things like that in your life. It's just not as good, right? Or the map on your phone. We used to pull out the map and check the quadrant that you were going to, right? It just makes life better. And it's just really hard to stop. But, a couple of the intersections, right? The intersection of the internet, AI, and quantum is potentially really, really dangerous, right? The first government
and robotics, right? It's kind of all the robots.
The first government to figure out quantum has a distinct advantage over other governments. Like, that's certainly true.
I think that's a great place to end it. We're at the top of the hour. But thanks so much, David. That was really, really interesting. Thank you.
Yeah, thanks for having me. And again, big fan of everything you're doing. So I look forward to checking out other episodes as well.